Good morning. We will pay attention to provision for bad debts or allowance for credit losses today. Entities must write off bad debts because debtors do not pay their debts as a result of insolvency or they died or disappeared. So if you are 100% sure that you are not going to get the money, then you will write off the bad debts at the end of the financial year so that you don't show your debtors as an asset at a higher amount than you know you will be able to recover in the future. And when you realize that the collection fees is going to be higher than the money recovered, it is cheaper to write off the bad debts. Although you write off bad debts at the end of the year or during the year, there are still certain debtors that you are doubtful about whether they will be able to pay their debts. It is unrealistic to show the total amount owed by debtors in the balance sheet if you know that you will lose some of this money in the future. Therefore, you will decide that you must reduce this debtors or asset to show the amount in the balance sheet at the end of the year at the lowest of the outstanding amount or the net realizable value. The outstanding amount is the exact figure that the debtors owe you. If you think that there are some of the people that's not going to pay you, you have to provide for that because you can't show your debtors at an amount that's higher than the amount that you will actually receive in the future. So then you will show the amount at the net realizable value. That means the amount that you think you will recover from the debtors in the future. Once a year, that is always at the end of the accounting period, provision for bad debts will either be created if it's the first time that you do it, or if you've already created a provision for bad debts, at the end of the year, you will either increase it if you think there's going to be more people that will not pay in the future, or you will decrease it if you think you will lose less money in the future. This will enable you to give a true and fair presentation of the financial result in your income statement and to determine the financial position in your balance sheet. Creating a provision for bad debts. A provision is regarded as an amount set aside so that it can be recovered in order to provide for the decrease in the value of an asset. So we make provision, we provide for the possibility that we will lose some of the money that the debtors owe us in the future. An allowance for credit losses or provision for bad debts is then created if it's the first time that you decide to do this, because there is uncertainty about the collectability of some of the debtors. The actual debt which will ultimately prove to be bad debts are not known at the time when the provision is created, but you know that certain debtors will not pay their account. So this is not people that you really write off the debt as you would do with people that is insolvent, dead or disappeared. This is a provision in case people don't pay in the future. The entry that you will complete is to debit the provision for bad debts adjustment and to credit the provision for bad debts. The creation for provision for bad debts at the end of the accounting period is done with a general journal entry and then posted to the general ledger. If we look at our ledger account, we've got a debtors control account. That is my positive asset. And an asset always increases on the debit side, so the balance will be on the debit side. Say, for instance, they owe us 41,000. Now we look at our debtors and we think there's a possibility that we will not recover 1,800 in the future. Normally, I will credit debtors control to indicate that my assets decrease. But in this case, this is not a final amount that we know exactly whose account will be reduced. So therefore, we create a negative asset provision for bad debts, and that means that provision for bad debts is my negative asset that will reduce my debtor. These two accounts actually form a unit. This is the debit side of my asset, and the provision for bad debts is the credit side of my asset. So you will always record the provision for bad debts on the credit side when you create it, and I will show that provision for bad debts adjustment will be debited with the 1,800. This provision for bad debts will then, after the first year, be adjusted every year, either increasing or decreasing it. When I do the balance sheet, I will take the figure in the debtors control, 41,000, less the provision for bad debts, 1,800. The provision for bad debts adjustment will go to my income statement. The expense account provision for bad debts adjustment is transferred to the debit side of the profit and loss by means of a closing transfer at the end of the accounting period, just as we would take all our other expenses, salaries, water, electricity, telephone, to the profit and loss, so that we can determine our profit or loss at the end of the year. So the year that we create the provision for bad debts, the adjustment account will be an expense, and it will be transferred to the profit and loss as an expense. The allowance for credit losses, not the adjustment account, will always have a credit balance, because that is my negative asset that will decrease my positive asset, debtors control. In the balance sheet, it is deducted from the debtors to show a more realistic amount. So in the balance sheet, we will show the debtors balance, 41,000, less provision for bad debts, 1,800. This account remains in the statement of financial position section of the general ledger. We will not take it out of the account again. This 1,800 will stay in that account until the end of the next accounting period, and then you will decide whether you want to increase or decrease it. No entries will be completed during the year in this account, only at the end of the financial period.